Welcome to our weekly Forex Forecast, and this is for trading for the week of January 14th to 18th, 2019. Just a quick disclaimer here before we get started. This is for educational purposes only. Trading is a risky business, so please be careful with your money. So as usual, we'll start off by taking a look at our Forex Factory calendar here, and let's see what we have coming up. So on Monday here, not a ton of important news for New Zealand dollar. We do have the business confidence numbers, which will be important. And actually, before that Sunday, we have trade balance numbers out of China. So when Chinese data comes out, it's important for Australia and New Zealand because Australia and New Zealand are both big exporters to China. So if the numbers are positive, it will be positive for Australian dollar and New Zealand dollar and vice versa. So that number is important to keep in mind. And then on Tuesday, this is where the biggest thing will come up here. So for US dollar, we have PPI numbers. Again, those will be important because they're leading indicators. And then we have Draghi speaking. The biggest thing, though, that we have coming up is the Brexit vote here. And the forecast is that it will be rejected in the parliament. So this is a very, very important item. So keep that in mind. Any pound crosses, British pound crosses, or I should say all British pound crosses will be impacted. It will likely also impact the euro crosses because this vote has been so contentious for so long, and now so this will be important. So basically, it's a critical vote. Keep that in mind. We have FOMC members speaking here, but we have seen a lot of FOMC members speaking. Powell spoke last week as well. And overall, basically what the Fed is saying that they are going to wait and see. They're concerned about Wall Street, about the health of the world economy. They're concerned about trade war between US and China. So all in all, there's a lot of concern. So that's why, and also we have seen President Trump really sort of bash Fed because of raising rates. So as a result of that, the Fed has decided to take more of a cautionary stance towards raising rates before they were supposed to do 3 interest rate hikes next this year, 2019. Now that number has been reduced to 2, and we'll have to see how many they actually do because a lot of the commentary out of the Fed is actually not very bullish. So we'll see if we get even one single interest rate hike. So that one is negative for the US dollar. We have seen US dollar has been going down, and the government shutdown is still continuing, and that is not a positive thing for the US dollar either. The markets do not like political chaos or political uncertainty, as we have seen with this whole Brexit vote for British pound, and we have seen the negative impact on British pound. So similarly, even with the US dollar has been dropping as a result of this political uncertainty. And then we have Bank of England, Governor Carney speaking. Anytime there's a central banker speaking, it will be important, especially right now. So Bank of England essentially said that they are not looking to raise rates just yet because of the problems with Brexit and all of that. So there's a lot of concern around that. So they are staying pat on raising rates. But again, anytime any central banker is speaking, especially when we have Brexit tossed in and all of that, their comments are very important and can impact the market. CPI numbers here for British pound, these will be important here. For UK here, the CPI or inflation numbers have been positive, and this is why Bank of England did an interest rate hike, and there was more people looking for interest rate hikes out of that. But it's hard to see them raising rates at this point with all the uncertainty that's going on. But if the data comes out positive, it will be positive for British pound, and we're likely to see that go up. And then we have G20 meetings. So when we have different world leaders getting together, usually there will be a lot of reporters going there as well, and they're looking for comments from all these leaders. And as a result of that, it's important for us to keep an eye on our audio feed because we generally will see comments that will then have an impact on the market. And because the meetings will be going on all day and reporters will be there looking for comments during breaks and all that kind of stuff. So these comments can come out at any time. So it's important to keep an eye on our news feed during these meetings. So that's day one. And then we have Bank of Japan, Kuroda speaking here. Now, Japanese yen is at an interesting point. So anytime there is uncertainty in the market or there is flight of risk, everybody tends to go into Japanese yen. So even though yen is not being impacted by Bank of Japan, but the Bank of Japan is concerned because when the markets, equity markets tumble, Japanese yen goes up. And when Japanese yen goes up, the exports become they become more expensive, and that's negative for Japan. So Bank of Japan is in an interesting position, or Japan overall is in an interesting position because they need to find a way to manage the currency fluctuation as a result of external things that are going on in the world, not even in Japan. So it puts them in an interesting place where they will have to manage their currency because of external events, and they can do that by just making comments about it. So even though they're not physically intervening in the market, they can just make comments that will be negative for yen because they don't want yen to go up. So that's why it's very important. The role of Bank of Japan or just Japan in general will be important right now. And then we have second day of G20 meetings. So same thing, we just have to keep an eye on our audio feed. And then we have retail sales number for British pound and CPI inflation number for Canada. So again, CPI or inflation is one of the key data points that the central banks look at. So that's why it's an important number to keep an eye on. All right, so now let's go into our charts here. So we'll take a look at our index here, dollar index. We'll start off with the dollar index. So looking at the weekly chart here, we have seen that the dollar index has been dropping for a number of weeks here, and it still looks negative. So there's a big pin in the bottom, but the candlestick is still bearish, which means that we could see price drop. So this candle here looks similar to this one. See how price dropped after this one? And the difference here was that it was into support. Here we are not really into support. There's still room for price to drop a fair bit here. So in this case, my bias is to the downside, but I would be careful what happens or keep an eye on things or price action as it comes into that 95 figure there, because generally when we have a large pin, that means the buyers have stepped in, right? So we have to see how strong the buying really is. That's why we'll have to pay attention here. If the buyers do step in, then we're likely to get a reversal. Or what can happen here is that price just goes in here, pushes up a little bit, and then drops further. So bias is still to the downside, but like I said, I would be careful at the bottom here and pay attention to what the price action is telling us. So the bias for the dollar index here is bearish. Let's take a look at Euro index here as well. So Euro has been positive lately just because everything, US dollar has been negative. And as a result of that, we have seen a Euro go bullish. But now this week, we have a large pin on top. And like I mentioned, Brexit vote's coming up on Tuesday. So going into the Brexit vote, so actually one point to keep in mind, when an important thing like this comes up, I got an email notification from my broker saying to be careful with margin requirements. If you are trading, during this event, I would be very, very careful, because as we have seen, the liquidity hasn't been great. And we saw with that flash crash, things just dropped and then came back up. That can happen. But the problem with that is it can wipe out your account if you are over leveraged. Even if you're not completely over leveraged, but you have a position on, the spreads tend to open up during this time, and they will not always respect the stops that have been put in place. There is huge amount of slippage during important events like this. So I would highly caution you to keep that in mind, especially if you're trading any of euro crosses or pound crosses on Tuesday. There's a huge risk of margin of leverage. So keep that in mind. People can lose their accounts. So again, I just wanted to caution you on that. Okay, so for the Euro index here, we have a large pin, but there is still some bullishness in this one. So, so here is a similar example here. We have a large pin to the upside. Now, with this one, with everything that I have just said, what I would say is, again, I will look for price to go up and see what happens during or once price gets into that area. So there is resistance there. And as we can see, it's coming all the way from that previous pin. So there is resistance there. If price is not able to get above this level here, chances are it can turn around. So that's a pretty fair size pin. But again, depending on how the vote comes, what the sentiment is, market sentiment is during this time, it can go higher as well, because like I said, there is all this room to the upside. So again, just be cautious in the early part of the week here. But overall, with this one, I would say it can go and test a high, and then likely we could see it come down. Let's go into our charts here. We'll start off as usual with our euro here. So euro has been dropping for the last couple of days, and hence we got our pin bar in the euro index. So this is where we are with our euro chart. So what this shows us is that we saw price drop. It kind of stayed here for the longest time, broke out above the range, and now we have a large pin, which is very similar to the euro index here. So again, in this case as well, I would say there's room for it to go and test the high, or even into this support resistance level at 1.1620. So the bias for now will be to the upside, but again, with caution here. It can go all the way into 1.1620, and then we have this support resistance there, so price could turn around there. For now, the bias is bullish. 1.1620 will be the target to the upside for euro dollar. Pound here, pound has been bullish, especially with that Brexit news coming out. This has been going up, so bias is bullish. It can go up further. So now, if the sentiment turns completely bullish here, it can go all the way up here into 1.33. But for now, 1.2920 is the level that I'm watching, and see how price reacts at this level here. And if it breaks through, then I would look for price to go higher. However, there will be a great deal of uncertainty, and liquidity is likely to be low because we are heading into an important event. So keep those things in mind. For now, bias is bullish, but the Brexit vote can change all of that. Aussie dollar here, this has been going up as well. Like I said, US dollar has been getting crushed. And as a result, everything has been bullish against the US dollar. So what we are looking for here is bullishness here as well. So that's a big bullish candle close on the weekly. So I would look for price to go up. And as we can see, there has been a big bullish move to the upside, because US dollar has just been getting hammered here. So in this case, bias is bullish, but we are into resistance here. So keep that in mind. There's resistance right here. So if price cannot break through, it can turn around, right? Because we are into resistance. Similar to this, when price was into resistance here, for example, we had a bullish candle, then price went right into this support that turned into resistance and turned around. So this can happen. However, for now, bias is bullish. If it gets through that level, then I would look for a pullback and a continuation to the upside. So bias for now is bullish for Aussie dollar as well. New Zealand dollar here, this one has been very bullish as well. So bias here will be bullish as well. Very, very strong bullish candle close. Last week we had a bullish pin bar, and as we can see, price went up. Now we have a bullish, strong bullish candle close. So I would look for price to go up further. But again, here we are into support resistance, or I should say resistance here, support that has then that can then turn into resistance like it did here. So for now, bias is bullish, but again, because we are into resistance, I would be careful with all the dollar crosses right now, because we have been for the last couple of weeks, it has been a strong push against the US dollar. So things could turn. So always watch out for that. But for now, bias is bullish. If it breaks through, I will look for a bit of a pullback and then a follow through move to the upside here. 69.60 or 69.70 will be the target to the upside. So bullish bias for New Zealand dollar here as well. Dollar CAD, we have seen a huge drop in dollar CAD, but we are into support right now. So bias is still bearish, but there is this big pin in the bottom there, which means that we could get a bit of a pullback. So this is the huge move down here on the daily chart here. So we have a bullish close on Friday here, so which means this one could pull back higher. So I would look out for that. So this could go higher in terms of pullback before it turns around. So either into that level or into this pin here. So let's say 133.40, and then maybe a continuation move to the downside. So overall bias is still to the downside. However, we could see a pullback into this 1.3340 level, or even into 3380 level. So I would watch out for that. But overall bias is still to the downside, and the target here is 1.30 level. So about there, 1.300. Bias is bearish for dollar CAD. Euro pound here, with the positive sentiment coming into the pound here, euro, we saw this huge drop in euro pound. So bias is bearish here. We have a bearish pin bar. So I'm looking for price to drop further, and the target would be 0.8690 level here, which is the bottom, but it could take some time for it to get there. So let's say 87.20. So 0.8720 will be the target. So bias is bearish here for euro pound. Euro Swiss franc here, this has been interesting. So we saw a bullish move to back into the high here. And now we have a large pin. So in this case, I would look for price to potentially retest the high and then come back down towards the bottom of the range here. So because there is bullishness, we should look out for, or I'm going to be looking out for this push to the upside. But then this seems to be a strong resistance here. So if it stays below 1.1350, then I'll be looking for price to turn around there and come back down. So that's our Euro Swiss franc. Pound Swiss franc has been very bullish here with our bullish sentiment in British pound. But when we have major events going on in the market, the sentiment can turn around on a dime. So be mindful of that. But should the sentiment continue to be bullish, it could go all the way into 1.3120. But for now, the first target is a 1.2800, and then it can go into, so 1.2800 will be the first, 1.2920 second, and then eventually all the way into the top here. So bullish for pound Swiss franc. Dollar Swiss franc here, we saw a huge pin here, huge drop, which leaves us with a huge pin because price pushed back higher. So now with this one, there is bearishness in the candle. Because of that, I would look for price to maybe come and test these pins here before it turns back around. So looking for a bit of a drop here before it goes further. This huge pin in the bottom suggests that buyers have stepped in and price is likely to reverse now. So I will watch out for that. Target will be 0.9900. So slightly bullish here for dollar Swiss franc. Yen crosses have been very bullish across the board, with our bullish sentiment playing a big role here. So this one is looking bullish. It's an inside candle, so keep that in mind here. Things can change, but it is bullish. So first target would be 141. Second target would be 143.50 to the upside here. So there is important resistance right there. So keep that in mind, because it can go into that resistance and then turn around. But overall, though, bias is bullish. So this is the thing. This is a risk. So we need to keep that in mind. But overall, bias is bullish and looking for price to go up higher. So that is Euro Yen here. Euro Yen has been trading in this range the entire week. So in terms of our weekly candle here, we do have a bullish candle close after this huge pin here, but we are into resistance here. So bias will still be bullish, and I'm looking for price to test the high here, 125.20 level, but if it breaks higher, 125.80 will be the target, and then we're looking into this 126 or 127.00 level. So bias is bullish here for Euro Yen as well. Dollar Yen, dollar again, US dollar has been weak. And as a result of that, we haven't really seen much of a move here. So bias is very neutral. It's a doji, price opened and closed at exactly the same point here, pins on both sides. So it's a neutral candle. So we'll just have to wait and see which direction it goes, but it will likely align to where yen is going overall. So if all the other yen crosses go up, this is likely to go up as well. Aussie yen here, this one has been very bullish. So we had a huge pin here. Then we got this bullish move, which is to be expected. And now we are looking bullish here. So keep in mind, there is resistance right there, which means price could go into this level and turn around. So that's something to bear in mind, but bias is bullish. So should price go through this level, I'm looking for that type of a move. So 80.00 will be the target, and potentially higher into this 80.80 level. So bullish bias for Aussie yen as well. New Zealand yen here, this one was extremely bullish here as well. As we can see, huge pin and then bullishness in this. So here we are still bullish and looking for 75.00. So bullish bias for New Zealand yen. And CAD yen, let's take a quick peek here. So we have a big bullish pin bar. We saw price go up. We are into resistance right now, as we can see. The bias, though, still is bullish. And next target here would be 83.50 level. So bullish bias for CAD yen as well. Again, be mindful of these resistance levels that we are seeing pairs going into right now. So if price does not break above this support level turned into resistance, then it can come back down as well. So that will be the risk that we'll have to keep in mind. All right, so now let's take a look at gold. Gold has been interesting. It has been playing in this range the entire week here. So if you take a look at our weekly candle, we have a neutral candle here. So let's go back to the daily just so that we can see price a little closer here. So it's range bound at the moment. So what I would say here would be, because there's a pin, large pin on the top there, I will look for price to come back down towards 1276. And this will be the deciding point here, whether price goes through this level to the next level, 1266, or does it come back into the range once again. So right now it's neutral, it's range bound. So we have to see which way it will break the range. So if price comes into this 1276 level and holds above, then I would be looking for a long back towards the top of the range. And once it gets into the top of the range, if it holds below that level, then I would be looking for it to come back into the range here. So for now, this is a range bound move. Once we see the price break out of the range, whichever direction it breaks out of the range in, then we can take a look in that direction for the trend to go there. But for now, this is a range-bound move. Oil has been bullish for the last number of days. Now we are into this resistance level here. So at this point, this is a pullback, and we have two bullish weeks here for oil, and this is one of the reasons that our Canadian dollar has been strong as well. So dollar CAD has been dropping because oil was very strong. It was recovering. So now there is bullishness in this candle. Well, it's very actually bullish. So I would look for price to go and test 54.83, and then we are into this strong support and resistance area. So bias is still bullish, and target here will be 54.80. And potentially we could see price come back from there. But if it breaks, then we can go all the way into this 59.50 level. So for now, bias is bullish, and 54.80 will be the target. Copper here, copper has been sort of sideways here as well. So looking at the weekly candle, we see that price is holding below this previous support resistance level. It went to test it. We have a pin similar to this one here. So what I would say here is, again, I will look for a retest of that resistance. If it holds below, then I'm looking for price to come back down and potentially to test the pin there in the bottom. So the target will be 2.52 level here, looking for a retest. And if it stays below 2.67, looking for it to drop back down. So that's copper. So we've done gold, oil, copper. Let's take a look at silver. Silver is very similar to gold here. It's still trading in the range just like gold. And in this case, we do have a bearish candle, very similar to gold here. So bias will be to the downside within the range. So I will look for price to come back down, maybe towards 15.26 here because of this pin. But the bottom of the range is very close though. So first target is 15.47. And then we have this 15.26 target. So if it breaks below this, I will look for it to drop to the next level. But it could just as easily stay in the range because it has been range found for the last several days here. So keep that in mind. But for now, bias is bearish here. Bitcoin, big drop here on the daily, and it's still trading in this range here. It hasn't quite broken out of the range. So bias is bearish, I would say. 31.50 will be the target to the downside, but we are in range. So if price does not break through, it can go back into the range here as well. So be mindful of this 3,500 level. So if it stays above 3,500, I will look for it to go back into the range. If it breaks below that, 3,150 will be the target here to the downside. For Bitcoin here on the weekly, it's just in a range still, right? It's just in a bigger range. So this is looking bearish. So as a result, I will look for price to drop for Bitcoin towards the bottom of this range. So it's rejected the top of the range. So I'm looking for it to go towards the bottom of the range. Okay, so now let's take a look at what our indices are doing. Market has been very bullish here for the last entire week here, or 3 weeks actually. So we saw price drop and then it has gone back up. So the last 3 weeks, price has been quite bullish here. And now we do have a bullish candle close for S&P 500 on the weekly, but we are into resistance. And if we take a look at the daily, price seems to be compressing a little bit. So it's not, the candles are not huge. So price is compressing. It feels like, or it looks like it's moving upwards. It is, but overall, the movement is not very strong. So there isn't a ton of momentum here, which means we can see the price reverse as well. So there is a risk of reversal here. Another thing is that US and China have been holding trade talks. And so far, we haven't seen any kind of any sort of agreement that has been reached between the two parties. So for now, the equity markets have been bullish, looking for an agreement, because at this point, both the parties seem to be suffering. The Chinese numbers are down, as well as the US. The businesses are complaining about the trade wars, and we saw stock prices drop. Now, after that, there was an announcement that US and China would hold talks because they did have a 90-day truce and they were supposed to talk. However, we were supposed to get news, some sort of news coming out of that last week. There has been nothing but crickets, which does not bode too well in terms of agreement being reached. If there was an agreement reached, or if there was even an indication of an agreement being reached, I'm sure White House or President Trump would have tweeted and said something about it. But because there's been absolutely nothing, that makes me worried. That means that the news may not be positive. So that's just an opinion. Now we'll have to wait and see where it comes out, what kind of news comes out. But I think the market may get tired of waiting for this positive news, and that whole bullish optimism can actually go away. So as a result of that, we could see this turnaround. So there's still bullishness in this, but then we are into this strong resistance. So what I would say for now is it's bullish, but with caution. So going to our weekly here, I would say we are right into that level where prices can turn. And if it does break above this level, then I would say 26.91 here. So there's still bullishness. First target 26.20, second target 26.91. But I would watch this level here for a turnaround. And if the equity markets turn around, yen crosses are likely to turn around as well, because the yen crosses have been very bullish because the equities have been good. So the money kind of flows out of yen and into the equity market. So there's a risk on environment. And should it turn, the sentiment turn, those yen crosses will turn as well. So Japanese yen, no, sorry, not Japanese yen, Nikkei here. This one is sort of in a range there. So we do have bullishness. So we had this tweezer bottom type of behavior here and a bullishness. It is into resistance here, but there is still room to the upside. So I would say the bias is bullish, but again, I would be mindful of what sentiment develops in the market. So I would look for this as the first thing. If it breaks above that, we have resistance at 28.39, then I would look for something like this. So for now, bias is bullish for Nikkei there. All right. And then looking for NASDAQ here, same thing. The move has been bullish, but it's starting to look compressed here. So keep that in mind. And with the move being compressed, we could see a reversal. That's usually what it means when the moves start to get compressed. So, but from a weekly, this is still looking bullish. So I would look for a price to go into 66.50. If it breaks above this level, then into 67.64. So this is bullish as well for now. And then we have DAX here. DAX is into resistance here, and it seems to be having a bit of trouble. So if you look at the weekly here, bias is still bullish, but now we are into resistance, which means price can turn around here and come back into this range that it has been trading. So that would be my first thing that I would watch out for, this type of a move here. Now, if it breaks above the high here, then we have room to the upside here, and then 11,153.60 will be the target here. So again, we are into that area, and especially if we take a look at what's going on from sentiment perspective, if we do not get positive news of agreement being reached between US and China, then we could see a turn of sentiment in the equity markets this week. And with the UK here, FTSE, this one is, it was bearish on Friday. So we are right into resistance there. However, there is still room to the upside. So we are into resistance here, but there's room to the upside. So there's still bullishness here. And if it goes above the resistance, I would look for next level. So the next level is at 70.89. So for now, there's still bullishness in it, but if it cannot hold above the 69.77, then chances are it can turn back down again. All right, so let's take a look at questions here. Euro, Aussie. So I mean, missed equities. Oh, so what I'm saying is equities and yen, they are basically, there's an inverse relationship between equities and yen. When equities are going up, Japanese yen is down, which means all the yen crosses are going up. So yen crosses and equities are positively correlated, so they would all go up together. If equities turn around, then yen crosses will turn around as well. So pound yen, euro yen, Aussie yen, all of those will turn around. So that's why we have started looking at equities now, because I think in 2019, 2020, we'll see more impact of equities, or we'll see market moves driven by equities, which will then impact our Forex trading. So that's why, so that's the relationship anyway. So if equities drop, then yen crosses are likely to drop as well. All right, Euro Aussie. Let's go take a look at Euro Aussie real quick here. And there was a question about what audio feed to keep an eye on. I like I think it's called the Squawk Box. That's the one I like. So I know FX Pro gives it for free, but you can also look at any of your, sometimes the brokers will give the audio feed for free, or they may have a news feed. So I would keep an eye on that. So RandSquawk, I think that's the one. RandSquawk is the one that I like, which FX Pro brokers will give for free to their clients. And then we have Euro Aussie. Here we go. Euro Aussie is looking bearish here. So we have been looking, so it met our target. This is the targets we were looking at in our trade room. It went right into the target here on Friday. So bias is still bearish. So if we take a look at, so we have a big bearish candle close here. So next target will be 1.5667, so bearish bias for Euro Aussie. Okay, so I think I have addressed all the questions. So somebody's saying they cannot hear anything. That may be an audio feed at your end, because it looks like everybody else is able to hear. All right, so before we wrap it up here, I did want to share something with everyone. I'm going to be starting the Turning Pro Challenge again. So we'll start as of February the 1st. And what does this mean? So the Turning Pro Challenge, basically the whole idea of Turning Pro Challenge is to do the things that professional traders do, so that our trading results will be similar to them as well. So last year we ran the Turning Pro Challenge. This year I'm going to run it again. There were some lessons learned from last year. Again, those will incorporate for this year. So if you want to just follow along and look at the weekly reviews, that will be free. If you just want to look at the worksheets that I'm using, those will be free as well. I'll give you the templates and the worksheets if you want to follow along with me on your own. But if you wanted to work with me through this challenge, so if you want some mentoring and coaching with me, I'm doing a boot camp on. So basically, it's 90-day program where every week we'll have a coaching calls, and all of us will start with the same amount of capital. So you don't need to have a live account. You can do it in your demo account. But the idea is to have accountability and feedback on your trades and do this together. So you'll have access to me. We'll have a Facebook group that we'll create where we'll work together. So you can show me a chart. You can ask me for feedback. We will do accountability. We'll share our account. So again, you can do demo account. You do not have to show your real account, even though I will be using a real account, but you can use a demo. But the idea is to work with a coach. So when we go play any kind of sports, we don't just do it on our own. We have a coach that will give us feedback on our shots that we are taking, how we are playing, and what needs to be fixed. So this is the exact same idea here. And I find that's the part that's missing. So a lot of times it's not about the strategy. Everybody has a strategy, right? We all know what to do, and yet sometimes we cannot produce the results. So this program is geared towards helping you achieve the results. So really work on our trading this year. If it's discipline that you're lacking, or if you are taking trades, if you're not understanding the market direction, you're missing components, those are the things that we will work together on. And I've been trying to update my program for a bit here, and I just haven't gotten around to it. So in this one, I will also be doing that. So you will get all my trading strategies included in it. So every week there will be two live calls that we'll do. One will be to teach my strategy. So we'll look at all the technical analysis, fundamental analysis, market correlationships here. So like I talked about equities and Japanese yen, these are the things that will become very important because markets have changed. We cannot just trade technicals anymore. So with everything that's going on in the world with the US-China trade relations and other things, there are more things that we need to keep in mind today. So we'll go through all of that. How does oil impact Canadian dollars? Or what are the things we need to? How does China have an impact on Australian, New Zealand dollar? All of those things will be incorporated. So you'll have a full-blown course. So I've been trying to develop this, but it's a very comprehensive course. So I haven't been able to do it, but I'm going to do it as a part of this. So they'll be teaching one day a week, and 1 day a week will be the accountability call, where we'll share our trade journals, we'll share our trades that we have taken. Again, you can do it in demo account, but it will give you the accountability, which means your performance will improve because now you have someone that's holding you accountable. And I will provide feedbacks on your trades. What are the things that you need to do to improve your trading? So you'll get a lot of time with me. There will be, like I said, weekly trading lessons, so you will understand the markets better, and we'll have a private Facebook group so that not only are you getting feedback from me, but you can share the trade ideas as well. And then you will get my daily market analysis calls as well. Just like we went through the charts here, I do this on a daily basis. So we cover about 20 different pairs. So you will get access to the market analysis, as well as the spreadsheet that I'm going to start doing as well. And as a bonus, you will get my pivot point strategy course, as well as the indicator. And if you're interested in joining this, you can go to this address here. Let me just put it in the chat here as well. If you're interested, and the price for this is $997 here for the entire time. Now, the course that I produce here, this is the big course that I've been talking about, $3,000, because it will be very comprehensive. So, but for now, it's $997 for the entire thing. Any questions? Okay, so no more questions. So you guys have a wonderful rest of the weekend. And I will see you next week then. Bye for now.